In this video, we're going to look at Apple stock. We're going to look at whether it is potentially a buying opportunity at the moment in the dip. And more importantly, we're going to look at whether you can get rich buying Apple. Welcome back to the channel, guys. If you are a newcomer here, head down and subscribe so you don't miss out on any future content that I'll be bringing out. And while you're down there, give it a like, or wait until the very end. You've enjoyed the content that I'm producing and then give it a like because you like it. Pop down in the comments below your thoughts on Apple, how big your position is in Apple, how many shares you own, and how well it is doing at the moment. Let me know if you're going to be buying this particular small dip as well. The main focus of today's video is really to see if it's possible to get rich buying Apple stock, if of course history repeats itself, which it often does. We'll have a look at Apple's past performance in the last 10 years and its rate of return on a yearly basis on average, and we'll apply that average rate of return. This is no exact science, it's going to be an average rate of return on a yearly basis, and look at that moving forward. Pop it into a compound interest calculator, which is one of my favorite things to do, and we'll look at how much you would need to start off with and invest to become rich. Let's call that a millionaire by investing in Apple stock. Obviously, none of this is financial advice, and Apple stock could just plummet for the next 10 years. We just don't know that, so don't take this as advice, but we're just going to look at what has happened in the last 10 years with Apple, maybe the last 20 years, we'll average it out even further, and what potentially that could mean for the future if it continues to do what it's doing. Has Apple grown more in the last 10 years than it's ever going to grow in the future? I think it's got some really exciting things coming in the form of the electric vehicle space and bringing out a car in 2023, 2024, and they're always going to be at the forefront of innovation when it comes to technology and things like that. So I truly believe in Apple as a company. They do also pay a small dividend, so that is an extra bonus as well. And I don't know if you've seen one of my other videos or a few of them. I am a holder in Apple stock. I'll show you in the portfolio with complete transparency, so it's not just coming from anywhere. I am an investor in Apple, and I am dollar cost averaging in Apple moving forward on a monthly basis. Now I will be buying at least one more position in Apple moving forward. So enough of all that, let's get into the computer. We'll have a look at the rate of returns in the last 10, 20 years and find an average that is good to work with. We'll then apply that to a compounding interest calculator, see how much you need to be putting in on a monthly basis and what you need to start out with to get to that $1 million and become a millionaire. This is all going to be in dollars because Apple is in dollars. I'm not going to bother doing it in pounds, but we could probably look at it in pounds at the end and maybe just work backwards. So let's get in there and check that out now. Alright, so here we are in the portfolio. So I'll try to start off here just to show you the position. I've got 32 shares in Apple, which equates to $3,000 worth. So again, we'll continue to build that month by month going forward. We've had a small dip here in the last few days. I'll quickly bring this up, just gives you an indication as to why. Warren Buffett, as you all know, these are the last moves he made last quarter, just reporting now. He has added new positions in Verizon and Chevron, so they could be good buys at the moment. He certainly sees a future in them, as well as trimming its massive Apple stake. I can't say any more because I need to do a trial or something, but we don't need to see any more. We've got what we came for, as well as trimming its massive Apple stake. So that's why, and Warren Buffett was a huge investor in Apple, it forms a massive part of his portfolio. But as soon as you hear that pretty much one of, if not the world's best investor is selling off some of its position, then the world reacts. So we've had a bit of a sell-off here. We're currently at $130-ish. So we're going to look at Apple's return in the last kind of 10 years, 10, 20 years. I've got an article here, it's Market Watch, and just one section we need to look at here. Over the last 10 years, the shares of Apple have delivered an average annual return of 43.5%. You have a look at a lot of other reports and figures, it's not as high as that, it's about 33%. But Market Watch is saying 43.5%. So on another website, I've got some more figures for Apple stock returns. This is from 2000. So if I just take the annual return from 2000 to 2020, we've got an average here of 43.89. So that's over 20 odd years, 21 years, and we've got over 10 years for a Market Watch. So we're going to take the figure of 43.5%. Now let's go into our trusted compound interest calculator, one of my favorite things in the whole world. I've already done these figures, so I'm just going to throw them in here so you can see them. So Apple share is currently this is your initial deposit, this is what you buy. We then put in the annual rate of return of 43.5%. Compound interval is going to be yearly, and we're not going to put anything into this for the moment, which will be your monthly additions, quarterly additions, yearly additions. So you're not going to buy any more Apple stock. Now, if you put $130 in right now into Apple stock, you bought one share and it continued at its rate of growth. This won't take into account stock splits and dilution of shares and things like that. This is pure, very basic stuff. Now, let's put a figure of 25 years in there. Bear in mind, we're not adding anything to this, and it comes out at just over $1 million. So if history repeats itself over the last 20 years, over the last 10 years, whatever figure you want to take, if history repeats itself and we take an average return, some years will be better than others, some years you'll lose money, other years will make up for that. But an average return over 25 years, if you just buy one share of Apple stock now, in 25 years, you will be a millionaire. Now let's change this up. Let's add $500 every single month to this. We're going to take out the years. Instead, we're going to do 12 years. And we're up to 1.2 million. I'll be pretty confident in saying if we did 11.5 years, we should be up to the million mark, and we're just over $1 million. So if you can put $500 into Apple every single month religiously, it would only take you 11.5 years. If history repeats itself and Apple does just as well as it has been doing in the last 10-20 years with the same annual rate of return, you will return $1 million. So I encourage you to play around with this compound interest calculator a little bit. We can change the rate of return, we can change the years you invest in, we can change how much you're putting in on a monthly basis. Let's say, for example, we're putting in £1,000 every single month. We can probably knock off a little bit here and get it down to just 10 years worth of investing. So if we just calculate that, we're just over $1 million. If we start with a more substantial balance, it doesn't change it a great deal, but gets it up to 1.2, which means you could be maybe down to 9 years to get yourself up to the millionaire status. A little bit more than that, so you'd have to invest for 9.25 years, 9 years in the first quarter, get the return. We're getting close, but you see what I mean. We can play around with this. I'll quickly do it in pounds as well, just to give you this for the British audience. Initial deposit could be, we'll keep it at £100 because that's nearly what $130 is, about $140 odd, but we'll keep it at £100 for the moment. And let's go, keep it at 10 years, same compound interest rate. So starting with £100, with £1,000 every single month brings us up to 1.82 with the same interest rate that Apple could potentially, based on historical data, return on a yearly basis. So I hope that was all helpful. I said I'd get yourself onto one of these compound interest calculators and just play with it, because it is compelling. You know, as soon as you've got this sort of figure over $1 million in 10 years, that's pretty compelling. But let's say you didn't want to do that and you wanted to do it for 20 years because you're quite enjoying work and you just want to leave it in there, you'll be shocked at what it comes out at, 44.9 million. So that's the power of compounding. Have a little look at that. I do encourage it. But with that, I would also encourage getting in and get some shares in the small dip we've got here. Could dip further, might not. I'm just going to dollar cost average, always buy, always buy. Apple's only going to do one thing in the long run. So get yourself into Apple, have a look at that. Check out a compound interest calculator. There we are. So there we are, won't take much as long as Apple does the same thing that it's been doing for the last 10-20 years, which it may well do, it might not. It might do even better. We might see rate of return at 50, 55, 60% in the next 10 years, in which case you're gonna get there quicker. So let me know your thoughts on Apple. Let me know if you're gonna be buying the dip. Let me know of a better stock that you could potentially get rich with. I'd love to hear it, obviously, because if I do, I'll look into it and invest in it myself. So I hope you enjoyed that video, guys. I'll leave that there. Don't forget to like the video, don't forget to subscribe if you haven't, don't forget to comment below your thoughts, and of course share this with a friend if you feel like somebody needs to see it. That's it for today. I'll catch you guys in the next video. See you later.